This is Mike Regan with Transact's 2-minute warning for the week of April 20th. And in this week's 2-minute warning, we're taking a look at what shippers should expect to see in the truckload marketplace for the remainder of 2026. Hi, this is Mike Regan with Transact's 2-minute warning for the week of April 20th. And in this week's 2-minute warning, we're taking a look at what shippers should expect to see in the truckload marketplace for the remainder of 2026. This is a bit of an unusual 2-minute warning. Normally we bring our crystal ball, September, October, say here's what the following year is going to look like. But a lot of you have been watching our 2-minute warnings where we've been talking about scenario planning. And some of you have gotten back and said, Mike, if we're going to have scenario planning, it helps to understand what's coming at us. So can you talk about the LTL, truckload, parcel markets, ocean markets? And in this webcast, we're focusing on the truckload market because we have some news, and we covered that news in our very important webcast that we held today on scenario planning with our friends from CSCMP and NITL, where we had renowned supply chain expert Yossi Sheffi, a dear friend of mine from MIT, Rick Blasgen, and myself, talking about why scenario planning is so important if you want a resilient supply chain. Now, what to expect in the future in the truckload market is that we are expecting rates to go up. It's not just because of the increase in fuel surcharges, although with a surcharge increase of approximately 80% in the last 7 weeks, people are saying, how long will that continue? We're expecting rates to go up. Now, when I was at the Food Shippers Conference in March, where I hosted a great panel discussion, I also had the opportunity to hear some presentations with my friends, Bob Costello, who's the chief economist for ATA, Eric Starks, the chairman of FTR, a great consulting and economic forecast company, and Rebecca Brewster, the head of American Trucking Research Institute. They highlighted the fact that rates will go up as well, and it won't be because of an increase in demand. The economy can be flat, go up a little bit, even go down, but you're going to see a contraction in supply. That contraction in supply is happening because you have trucking companies going out of business, but more importantly, you have the Department of Transportation saying we are going to be stricter about enforcing compliance on the issuance of CDLs. Now, a lot of people that got attention is the issuance of CDLs to non-resident aliens. When they went and did an audit in New York, they're saying you're issuing too many non-valid CDLs, so we're threatening to withhold $73 million in transportation funding. It's not just New York, it's California, it's Illinois, it's a lot of states. And when they did a surprise test at Oklahoma, for example, they found, I think it was as much as 20% of the CDLs should not have been issued to the people that were asking for them. Now, if you shrink this driver supply by 15 to 20% over the CDL issue, I'm not saying that that will happen, but it could happen. Coupled with the closing of trucking companies, you're going to have lower supply, higher rates. Now, that's why if you're going to do scenario planning, you ought to model that. Now, you need to listen to this webcast that we had today. It's a dynamite webcast, but more importantly, if you're interested in, okay, now that I know this, what do we do? Contact us here at Transact. We have a wealth of ideas about how you can reduce your cost, and we love to share it with you because with each and every 2-minute warning, we're here to remind you, we're on your team, here to help, passionate about seeing you be successful. Thanks for your time.